What's up, guys? It's time for the monthly real estate market update. This one is going to be an interesting one, so stick around. Let's go. $9,012 transactions were reported on the Toronto Real Estate Board for the month of May. This happens to be just about 1,500 transactions more than April, so a significant increase. But the shocker is that these numbers are 24.7%, so almost 25% higher than May of 2022. Now, in May of 2022, our interest rate was 1.5%. We're sitting at over 3 times that right now, and the sales are that much higher. It's staggering and shocking. The number of new listings is down 19% year over year compared to May of 2022. So it's pretty much a similar storyline to last month, where we are dealing with a shortage of inventory. All right, now let's take a look at average prices. Here's an image showing you average prices of 4 major property types in Toronto and in the GTA. And now the more important image showing you the price changes year over year for these exact properties. Now the shocker here is what's happening with the detached and townhome markets. The prices for detached homes in Toronto and in the GTA, as well as townhomes in Toronto and in the GTA, is up year over year. So these prices are higher than in May of 2022. Absolutely crazy. Semi-detached is down slightly in the city of Toronto, but it's up significantly in the GTA. Condo is down very marginally in the city of Toronto and down 6.3% in the GTA. This is surprising because we absolutely had significant price declines all throughout last year, but we've actually gained it all back so far from January until May of 2023. Let's take a close look at the condominium market by looking at the average dollar per square foot in Toronto and in downtown Toronto. Here you're going to see that an average condo costs $1,003 per square foot in Toronto, which is up 4.3% month over month. So from April to May, there's an acceleration in condo prices, and downtown condos are pretty much flat, up very, very marginally at 0.5% month over month. Okay, so market direction. As always, we track 2 stats: months of inventory and the total number of residential listings. Months of inventory actually dropped further to 2.4 months from 2.5 in April. This is indicating the fact that the market has tightened further. There's even less inventory to choose from. Let's have a look at a chart which is showing the total inventory of residential listings. This chart is actually forward looking because I grabbed this at the end of May, beginning of June, and what we're observing here is a very interesting trend. We are finally seeing an increase in listings. We're finally seeing the June 1st resale target get exceeded. So for the first time in a very long time, we're actually seeing more new listings enter the market than is expected for this time of the year. To get a good glimpse at the rental market, we're going to look at the Rentals.ca national rent rankings for May of 2023. Here you're going to see that Toronto saw increases month over month in rent prices for 1-bedroom and 2-bedroom apartments. Surprise, surprise. 0.8% from 1-bedrooms month over month and 0.1% for 2-bedrooms. Right now, average 1-bedroom costs $25.26 and the 3-bedroom costs $32.90. So nearly $3,300 to rent a 2-bedroom in the city of Toronto. So the macro picture. On May the 31st, Canadian Q1 GDP numbers were released, and the economic growth came in at 3.1%, above analyst expectations. In my opinion, this is the main reason as to why a couple days ago, on June the 7th, Bank of Canada, during its policy rate meeting, increased the interest rate by 25 basis points. Now, this came as a complete shocker to some, especially after the fact that we had an extensive pause But to me, the writing was on the wall. The economy is simply too hot, and especially the real estate market is simply too hot, preventing the inflation from coming down to the target of 2%, where the Bank of Canada needs it to be. Just today, June the 9th, Canadian jobs report was released. Canada lost 17,000 jobs. Unemployment rate ticked from 5 to 5.2%. Now this came as a surprise because economists were expecting a job gain. This is the first negative jobs report in a number of months, in a long while, to be honest with you. But this could be a sign of things to come as the economy begins to cool gradually from all the rate hikes. The United States Federal Reserve will announce its interest rate decision on June the 14th. Still mixed with regards to what the Federal Reserve will do, but after this Canadian interest rate hike, there's a lot of people that are betting on another hike from the United States. Finally, the feet on the ground. So with regards to the resale market, there's still very strong activity taking place in the resale side of things. Multiple offers, bidding wars, things of that nature. Nothing has changed substantially yet. So with regards to rentals, there's clearly still acceleration in prices and still extremely strong activity. What can you expect? We just had a record quarter in terms of the number of immigrants, PRs, that were issued to new Canadians. This, in my opinion, is a trend that's going to continue throughout 2023 because, especially as we might see another interest rate hike in July, it's possible that a lot of people that are looking to buy, will finally take a seat on the sidelines, rent, and wait this market out. This will again apply even more pressure on the rental side of things. Finally, with regards to pre-construction projects are seeing decreased demand. There's no question about it. There's a ton of projects that just came up, just recently launched. There's 900 condos, Union City Tower 3, various townhome projects on the peripheries of the GTA as well. They are dealing with slowing sales. Of course, there's still plenty of demand in the GTA real estate, so there's no question when you have a value project come up, the sales will do just fine at these projects, but just due to the sheer number of inventory and number of units that have hit the market, pre-construction will slow down. Thank you guys for watching. I hope you enjoyed the May market update. Please subscribe. I found the data for this month very interesting, and I do think that it can set the stage for the rest of 2023 in terms of our real estate market. Cheers.